are in listen-only mode.
Good morning, everyone. I hope everyone is having a wonderful Tuesday morning. Can everyone see my screen and can everyone hear me? Just type a yes in the question box. Well, we are doing good then. Okay, before we get started, I do want everyone to take just a moment to read over the risk disclaimer and hypothetical performance disclosure. This protects me as well as you. This is an educational room. You are here to learn. You're not here to trade. At least I hope not. Now we will be looking at the futures market. Um, Basically the NASDAQ, the Dow, and the ES this morning. And I'm going to go over the indicators as well as some of the higher time frames. Okay? All right, let's get started this morning. Now, normally you don't see all of these indicators on my screen. And the biggest reason is it's kind of overwhelming the first time that you look at it. But I wanted to go over all of the indicators and show you why I actually use all of my indicators. So these lines that you see right here on the NASDAQ chart, this is coming from the congestion zone indicators. And what that does is it actually tells me when there is support or resistance on a higher time frame. So in this case, you can see that once this ATR right here was broken, then the next area that may resist price is up here. Okay, does everyone understand that? Now, the NASDAQ, I call this a sweet spot because really from this yellow line right here up to this area, I call it a sweet spot because you only have one area that may resist price, which is right here. Once it clears that area, then it's got a clear shot right up to this area. And that's a really nice trade area. Does everyone understand that? Now, if you look over at the Dow, you've got an area here, another one here. This is the London low. This is another area and three more areas up here. So this is not going to be as clean as the NASDAQ. And the same thing over on the ES. You see we had an area here that actually stopped it, another area and another area, okay? So to me, the sweet spot is actually between these two areas. Does everybody see that? In other words, this is the area that I would want to trade on the ES, okay? Now, these areas right here were plotted yesterday, okay? These areas were plotted yesterday as well. So when it formed this congestion dot here, was unable to break it, okay, came back and retested it here. That was an excellent entry point, and it was actually this morning, I'm sorry, into this downtrend. Does everybody see that? Any questions on that? Get rid of all those drawings. Okay, we then have the ADX, okay? In the ADX, the most important aspect of the ADX is actually this magenta dot. Anytime this magenta dot has the formation of a mountaintop, we call that a magenta peak. And the significance is that price will retrace down to this ATR, okay? So we see one here, and that may be a mountaintop, okay? It didn't quite make it all the way back on the first try. Instead, it took 3 tries to make it back to this ATR. Now, you would know it made it back because you've got these red dots here, okay? Mike, the higher time frame for each aggregation, what is the best time frame to mark a congestion for a 30-minute chart or a one-day chart? I'm not following you on that question. I use a 12, a 45, a 180, a 720, and a 1440. So I know by the color of these what these are coming in at, okay? So if you're trading a 30-minute time frame, then it would be your next higher time frame, your next higher time frame, your next higher time frame. I don't use a 30-minute, so I don't know. Does that answer your question, Mike? No, this actually uses this is a 12-minute chart, so I'm marking a 45, a 180, a 720, and a 1440. You can mark up to 4 higher time frames on one chart. Does that answer your question? You can just do one, or you can do all 4. Does that answer your question better, Mike? In all honesty, the NASDAQ has been trading better than, the Dow or the ES. And why, I don't know. Sometimes it does, and that's the way it goes. And again, if you had these on your chart this morning, looking across these charts without any drawings on here, I could immediately identify, okay, the best market for me to trade today is this one. Why? Look at the difference in this. You've got one set of support and resistance here. The next set is up here. Now, compare that with this one, okay? Do you see how jagged these are? In other words, you have got areas of resistance and support throughout on the Dow and on the ES. But the NASDAQ, man, that was a straight shot this morning. It was a straight shot down and a straight shot back up. Does everybody see that? That's what I'm looking for. Which one is going to be the cleanest? It's going to be the NASDAQ. And it's very visual. And that's why I call it a sweet spot. Because when you get them like this, the sweet spot is between these areas. Okay? Now, on the ADX, anytime we have these magenta peaks, okay, then that is telling me it's going back to the ATR. So we have one here, we have one here, and we have one here. Now, I have this set to a 12-minute chart, okay? But imagine if you had these on the 180s or the 45s or the dailies. I mean, that retracement is going to be a major retracement. Do y'all understand that? Do you see how this magenta peak over here just came in? It should come back down to the ATR. Okay? that gives us a heads up on where price is going, okay? Now, am I always going to have these on my chart? In the trading room, no. I've got limited screen that I can show during one of these webinars, okay? And this is why a lot of times you don't get the whole picture because there's only so much you can present on one screen, okay? Does everybody understand that? Now, what do I typically use anytime I'm trading? Well, let me show you. I'm going to pull these off for a moment. And then I'm going to show you, these are the time frames that I look at, okay? And anytime, okay, let's go to the NASDAQ 12-minute chart, okay? When I see something of interest on these time frames, then I'm going to pull in my other charts. And this is a great example. Now, do you see how you've got trend divergence right here? In other words, you're making higher highs, but the stochastic is making lower highs, okay? So you're going up, the stochastics is coming down. That immediately identifies to me, I need to start looking to see if we're overextended or if we have volume divergence. I don't see either one right now. Now we're almost at the point of being overextended, but we're not quite there yet, okay? So this tells me we might retrace back to this ATR, but more than likely we're going to continue up a little bit, okay? Now, I can take that one step further and change this over to a 45-minute and see if the 45-minute agrees with me. And you can see right now we're breaking through this ATR right now. Do you see that? Do you see the magenta peak on here? That magenta peak actually coincided with a test of this ATR right here. That was just as the market was opening, okay? And that was your setup to go long on the NASDAQ. Do you see how the ATR held that price up? That was your entry signal. And it doesn't matter whether you're trading futures or whether you're trading binary options. That was your signal to take a trade. And this told you that it would at least go to 56.98, which is here. Does everybody understand that? Now, if you were reading the volume, and I'm going to have to kind of stretch this out so y'all can see it, because we did have the overnight session. But do you see on this volume bar right here, it made both a high and a low, but what happened on that volume bar? What happened was when that low was made right here, buyers stepped in and they pushed that delta all the way back up. So that told you not only did you have a magenta peak, but you also had buyers step into the market. Does everybody understand that? It is confirmed with the price bar because the price bar closed up at the very top of that bar. What does that mean? It means that the next bar will go up. Okay? So everything on these charts actually screamed the market was going to go up at the open. Now, it could have been traded using a binary option. Out of the money would have been ideal on this. It also could have been traded using futures. Here's another piece of it that most traders do not understand. The markets do not move the same in July as they do in October, November, December, January, and February. They slow down. Okay? So what does that mean? Well, let me show you if I can get the right spreadsheet over. Okay, let's say that we generally will go out 3 to 4 strikes, okay? And typically that might work because from 9 to 10 a.m. it moves about 40 points, 35 points, 24 points, 21, 21, almost 22, 22 and a half, and then in July it goes down to 17. Okay, so the NASDAQ has a strike width on a 2-hour binary. The strike width on the NASDAQ is 4 points. Is everybody with me so far? So if you are going out 4 strikes, that's 16 points. Yes, just the NASDAQ has a 4 strike width. This is only on the NASDAQ, and this is the average for 2016. So if you're going out 16 points, well, that would probably be okay, and you probably wouldn't have an issue during this period, okay? During this period, I'm probably going to limit it to 3 strikes out. But come July, actually July, August, and September, I'm probably not going to go out but 2 strikes. And that would be a total of 8 points. Does everybody understand that? Because if you go out 4 strikes, you're likely to lose. Because it would have to open and go straight up, okay, with no hesitation. And it's going to have to do it within, a 30-minute period because the binary ends at 10 o'clock. Do y'all understand that? So if you're used to going out 4 strikes and you don't have this information and you're going out 4 strikes in July, you're going to have more losses than wins. Is it because the indicators changed? No. It's because the market does not move as much. And we know this. At least I know it. Does everybody understand this? Yes or no? Now, if you're a 2-hour binary trader like I am, that really does affect you. And either I'm going to take a wait and see approach to see if today's going to be that average day, or I'm going to limit myself to trading market reports. And a lot of times on the binaries, if you're looking at 8 o'clock in the morning, you will not be able to go just 2 strikes out. You're going to need to go 4 strikes out to get a risk less than $30 a contract. Does everybody understand that? Maybe at 9:30 you can. Sometimes you can get really good ones. Well, yeah, I can. and hopefully everybody can follow this, okay? I want generally, if I'm on a full 2-hour binary, I want at least 2 bars to move in my favor, okay? And that has to be straight in my favor, okay? Now, typically, it's going to be 4 because you're going to move up and then move down a little bit and then move up and then move down a little bit, okay? So generally, you're going to have 4 bars, okay? So if I'm going out 4 strikes, okay, the strike width is 4 points on the NASDAQ. That's at most I can go out is 16 points. Okay, that gives you room for this kind of zigzag movement that the market does. Okay, does everybody understand that? That's right, Mike. And that's the reason you can probably do it on these days, but not on these. Okay, there's just not enough movement there. Okay. So to find the movement until 4 o'clock, we will average the movement. I wouldn't do that, no, because this is from high to low, okay? And you're going to have a lot in there that is encompassed within the high and the low. So I wouldn't do it like that, Dinesh. I would have to do another database on that. I think the market volatility actually has it though. Well, no, that's a 24-hour period. And see that one, that's going to be a hard database to do because you would only do 9:30 to 4:15 actually. It wouldn't be that hard. You could set it to do the .d. Yeah, it's 4:15. That's when the at least the binaries close anyway. And like, you know, on the Dow, the strike width is 12 points. Okay. And look at your movement on the Dow is only about 50 points July and August. Okay. These are the 2 lowest move months of the year. And I noticed when I was looking at it yesterday, I think it was like 4 or 5 strikes that you would have to go over. Oh yeah, the DAX is about 200 to 300 points. What are the best indicators for short-time trading? There are no best indicators, Georgie. It depends on what you understand that makes it the best indicator. You know, there are people out there that trade moving averages and they do great, okay, because they understand them. They have perfected their technique with moving averages, okay? I mean, I have a lot of people that would tell you mine are the best indicators, okay? But if you do not understand my indicators, quite frankly, they're not worth crap because you don't understand them and you don't know how to trade them. You know, and this is just an example here, where, okay, let's say that you have the indicators. Here's a magenta peak. That's not a magenta peak, but here's a magenta peak, okay? If you understand the indicators and okay, this is a 12-minute, and by methodology, you would go down to a 1-minute, okay? And this is going to go back to this ATR, you could trade that. But if you have not spent the time to learn this technique, it's worthless to you. It just is an indicator on a chart that you don't understand. And, it's not being ugly at all. It's just, that's the way trading is. You got to take the time to learn it. We call it the volume delta. Okay. If you don't understand that this meant buyers came in because it was confirmed by price, this volume is not going to make a difference to you. If you did not understand that's potential volume divergence, but you were waiting on the next bar, then you're not going to be able to read volume. And volume is an excellent indicator if you have the right data behind it. Does that answer your question? It's probably not the answer you were looking for, but it's an honest answer. If you go into reading the 180 in the 45, in the daily, in the weekly, these line up with the way that I trade, okay? 12-minute corresponds to the 180, which corresponds to the weekly. The 3-minute corresponds to the 45, which corresponds to the daily. This is a weekly, this is a daily. This is a 180, this is a 45. This is a 12, this is a 3. Well, you really do, Mike, and I give you as much as I can give you in this webinar environment, okay? But there's only so much that you're going to learn on YouTube. There's only so much that you're going to learn in this webinar. I'm not sitting here all day long to teach you how to trade. I give you bits and pieces of it, but that's the most I can do in this environment. And it's nothing we can do about that. It's the nature of the beast. I know a lot of traders that cannot read the price bars. All right. And this is just giving you pieces of what I do. Okay. This is an isolated low. Okay. This bar, just this bar right here, said that the next bar would make a higher high. Does everybody understand that? I can take that just off of that pattern and I can trade that on a binary option. All I need, 180 minutes, is basically 3 hours, okay? So I need to go out at least on a daily. If I go out on a daily, that one bar will make me profit. And that ain't nothing but price bars. Now, why would I choose a 45-minute or a 180 to do that? Because these will have less noise than these two over here. These are going to be the noisiest charts. These are a little smoother. These are even smoother. Do you see that bar right there? that formed last Friday. What is it? It is an isolated low. It is exactly the same as this one over here as far as the next bar. The next bar will make a high. What does that mean? That means you could have went long yesterday. Does everybody understand that? Because that bar told you that this week was going to go up. What will stop it from going up? That ATR right here on the daily chart. And that's what you're going to have to watch out for. If the strikes we calculate are not attractively priced, do we look at spreads? Probably not, because, you know, it's not going to be enough movement, especially right now. You know, let me drag this over. Sorry, I'm working off of a lot of screens today. All right. Right now, you're only going to get maybe a 50 pip move, okay? You're not going to make a lot off of that strike because you're probably going to pay at least $25 to go into it, okay? So what? You might make 15, 20 bucks. Now, if there's something that's going to move the market, for example, tomorrow, the Bank of Canada has their rate announcement. If they don't overprice that spread, that would be a good spread to do. Why? Because the average move off of that rate announcement is 80 pips. Okay, that's the one I want to trade. You have something that immediately identifies this market is going to move. That's the one I want to do a spread on. But even then, you're going to have to look at your premiums. Is it going to be worth it? If you're paying $40 to go into that spread, well, that's only going to leave you another $40 to make if it moves the 80 pips. Do you understand that, Mike? And, you know, again, I wrote about this on the Nadex blog. Crude typically moves in one direction. The U.S. CAD moves in the opposite direction. It's a negative correlation. So every time there's a crude oil inventory report, I'm in both crude and U.S. CAD. Okay? Everybody understand that? It's two trades. For example, I might be long crude, but I'm short the USD CAD. Why? Because Canada is the 7th largest producer of crude oil. So the Canadian dollar has a positive correlation to crude. Okay? And that means that if crude goes up, the Canadian dollar is going to go up. Well, because the Canadian dollar is the second symbol in that pair, that means that the USD CAD is going to go down. So that gives me two trades every Wednesday, except when there's a rate announcement. When there is a rate announcement, the rate announcement will take priority. Okay? So don't look at crude for the Canadian movement. And typically I do. I can tell you exactly where the Canadian dollar is going to move based on crude. Tomorrow is not one of those days. Not sure I know when to use an out-of-the-money binary versus a spread for a pending move. All depends on what kind of move are you anticipating. Okay, and this is a great example looking at this chart. Okay, when is the biggest move on the YM? Okay, it's January. Okay, February. So January and February, I'm probably doing spreads. Understand? Okay, when's the second largest move? Right before the market closes, from 2 to 4. These are spreads, okay? Because typically your average movement on these are very large. Now the rest of the time, okay, I'm generally going to use a binary option unless there is a market report that I know that is going to move the market. But then it comes down to premiums as well. Yeah, these are all Eastern times. Okay, and the reason it comes down to premium is sometimes they will increase the premium to the point where it just doesn't make sense to actually trade that. Non-farm employment, across the board, you could do a spread if the premiums are right. Now, when I traded it last Friday, I did not do spreads, and I didn't because sometimes in July, you can have a lower move on those non-farm employments. So I traded it very, very light. But again, that comes back to knowing your markets. The volatility report, which is listed under the handouts here. I'll just bring it up real quick. Okay, if you do not know what moves when it moves, then you download this volatility report. Okay, and let's say that you're trading let's pick my favorite. I think it's USD JPY. Where are you? Okay, now this was prior to 2015. Okay, so you can see here, somebody asked me the other day, what's the best time to trade the currencies? Well, the USD JPY, you can pretty much trade it at the Asian opening, which is 8 o'clock. So this is 7 to 8 and 8 to 9. You could trade 9 to 10, 10 to 11. And then during the London, you could trade it from 3 to 4 and 4 to 5. Okay, that's your biggest movers, pretty much across the board. You could even do the 8 to 9. And then you come back here to this one. Now, each one of these has a different expectation. So strike width on the USD JPY is 4 pips. Okay, now I need 4 bars to go in my direction, so that means I need a move of 16 pips. That means I could easily do this one. I could do 2 strikes on that one, no more than 2 strikes. 1 strike here and 1 strike here, out of the money. So when I look at the premiums, if I'm looking and I've got to go out 6 strikes, I'm not going to take it, okay? It's overpriced. Okay, now that's just general market movement. Okay, what market reports will affect it? Let's see here. All right, the ADP non-farm employment change. Okay, this isn't the biggest one, but that's going to give you about a 25 pip move. Well, that's just a typical move. Okay, if you went back and compared that to the table we just saw, that's just a typical move. Nothing great about that. Okay, so I'm not going to trade a spread off of this report because you're just getting the average move. Building permits, average move. consumer confidence, average move on the USD JPY, core durable goods, just average, core retail sales actually doubles it. Do you see that? It moves it 39 pips. Okay, this one, that might be a consideration for a spread. The core CPI, same, just minimal. Crude oil inventories, by the way, the DAX moves about 140 points off of that one. Okay. Final GDP does not move the USD JPY. The manufacturing PMI does not move it at all. Non-farm employment change. The DAX will move 109 points. Gold will move 133. The USD JPY will move 84 pips. That's one, hey, if I can get a cheap spread, I'm going to actually trade that one. Okay, are there any others that would stand out at me? Well, let's go look. The monetary policy statement on the yen for that time of the night actually is moving, substantially. So that one I would probably trade as well. But I wouldn't use a spread. I would just do a binary option. When we see the report move, is that from high? Yes, it's the full range of the bar. You can't really measure, the direction because it just wouldn't be feasible to do that, because then you're going to have to say, okay, did it move more to the upside or to the downside? And that's going to vary per report. It depends. And this is what I showed in the video last week, Mike. Sometimes the premium is so high that you can't trade the 2-hour or the daily. Okay? Non-farm comes on a Friday. Which one has the best time decay on a Friday? The weeklies. Time decay would be working in your favor on that day. So you get really cheap binaries and, they expire on the weekly. So it's sort of like, okay, do you want to pay Neiman Marcus prices or do you want to get a binary option for a Walmart price? Well, I'm going to choose the Walmart price. It's the best way for me to explain it to you. How much are you willing to risk on a binary? Does everybody understand that? I mean, I'd rather take $30 and make $50 to $60 than to put, $60 on the line to make 30 or 40. Which one is going to make the most? Yeah, I might have more losers because I'm only doing $30, but I'm making between 1 to 2 on the, I'm actually at least 2 on the reward side. So I don't have to be that accurate. And you'll be surprised. Sometimes you can actually get them for, I've done $15 binaries and made, $80 on it. Does everybody understand that? It just depends on your setup. Does everybody understand that or no? Well, thank you, Mike. Now, for those of you that were in the room earlier, remember I told you the 3-minute was probably going to retrace back to the ATR? And this is something that you see a lot. Do you see the volume divergence there? As it went back to test that high, the buyers decreased. Okay? And this is where your magenta peak came in. They said you're probably going to go back and test this, which coincides to one of the areas of resistance or support. If it's below price, it's support. If it's above price, it's resistance. We knew that ahead of time. So let's say that you were in a binary option. Well, you probably should have exited that binary option by the time that bar formed. Well, Wednesday you can do the weeklies as well if it looks like this is going to be a move that's going to continue, okay? And for that, you do have to read your higher time frames. Do you understand that, Mike? And again, if you go back and you look at the ES, do you see how, okay, you tested this one down here. It goes up to this area. But remember, the NASDAQ actually had the better setup because you had the sweet spot. And the sweet spots are always better. I've had clients that did $5 spreads on crude. The likelihood of it ever getting there was probably slim to none, but he was willing to risk $5 on it, and he actually made, I think it was like 95 on it. Because the chart showed that it was going to go up. And that's, a market report that you get every Wednesday. Typically every Wednesday anyway. The one area I would be watching on the NASDAQ is that 5754.75. And why would I be watching that? There's a couple of reasons I would want to see potential hidden divergence here, okay? In other words, on a long-term basis, if that comes back and it makes a lower high right here at 57.52, but that stochastics comes above the prior one right here, that means that this market is going to take off back to the downside. And it's going to do it pretty quickly. I don't think so, Mike. I don't know why it would be doing that other than, you should have more strikes above that or below it. Move this off to the side a minute. You can see that here you've got that volume divergence. This bar will be confirming it. Do you see how that made a doji? This is probably going to close below that one. It just means that it's going to retrace. Let me get some of these charts out of my way so I can see the other charts. Now this is on the ES. Okay. Do you see how this is making higher highs here on the 3-minute chart? But this is showing you trend divergence. Now it's not confirmed on the 12-minute. On the 12-minute, you're still making higher highs. So that just tells me we're probably going to get a retracement and then it's going to go back and take this one out. Do you see how the NASDAQ 12-minute is overextended? Again, you're going to get a retracement. Where would your entry point be? At the ATR. Okay, I would be watching as price approaches this ATR. Do we get hidden divergence? Do we get a reversal bar that says, hey, we're going to start going the opposite direction? Does everybody understand that? And if you look at the 12-minute NASDAQ, I do not have this intra-bar update, but I can tell you right now that that magenta peak is going to come in. Why? Because it just took out the low of that high right there. That tells me, okay, this is where the magenta peak is going to come in. Okay, so now you have two things on your chart that say, well, actually three, that the NASDAQ is going to retrace. Okay, and I'm going to mark them for you. First, you have an overextended stochastics with a reversal bar. This tells you it's going to retrace. You have an ADX peak that is coming in. I know it's coming in because it took out the low. And you have volume divergence. Will I trade that off of a 12-minute chart? No. But if this was on a 45 or a 180, I would be all over it. Everybody understand that one? Why? Because you've got a lot more distance on the higher time frames than you do on the lower time frames. Because you also have what is called time decay. Does anybody in the room know what time decay is? Time decay is the difference between one ATR to the next bar ATR, as well as when price is moving, okay? So in this case, you've got an ATR that is at 5688.8, okay? Price could come straight down and hit that ATR, or it could just meander, okay? And that means, well, it just kind of sits right here. Well, it kind of sits right here. Well, maybe a little bit. And each new price bar is going to pull that ATR up towards price. That's time decay on the indicators. Theta would be on the binary. This is actually on the ATR mic. And that is also the reason why I don't do a 12-minute magenta peak. Now, you might say, well, that's a lot of charts to keep up with. And it is. And this is exactly why we developed the market analyzer. So if I go and add the ES, and I add the Dow, and I add the NASDAQ, and I apply my template, let's go to a 45. usually the 45 magenta peak is what I'm trying to trade. If I am in the midst of making a magenta peak, it will come up in this column and say magenta peak. For example, right now, if I load the 12-minute, you might see it there. Okay, you can see that the NASDAQ is overextended on the stochastics, and then your magenta peak will come in here at the close of the bar more than likely, which is at 11 o'clock, which is 5 minutes. Now, I could also change this, I think, to on each tick. There you see it's coming in. And I could probably come over here to the columns. It just takes a lot more resources to do this. No. You also have to do it on the ADX value. And there's your magenta peak. So now, just within the market analyzer, you know more than likely you're going to get a retracement, and at this time it's going to be about 67 ticks. Does everybody see that? Now this is ticks, not points, but ticks. And on the NASDAQ, there are 4 ticks to a point. So if you go 70, right now is the current value, divided by 4, it's approximately 17 points. Okay? Now remember, the strike width is 4 points. So that's potential 4 strikes that it can move in your direction. Does everybody understand that so far? So if I come over here and I look at the indices binaries, and I look at the US Tech 100, we're going to do 11 to 1 minimum, and it's not open yet, so we have to wait. We could also look at the daily, but the daily is a bigger strike width. Right now, price is currently at 57.11. And that would be here, okay? So just looking at this, you would go 56.96, 56.92, or 56.88, okay? Now this is a counter trend trade, so I'm not real ambitious about doing that. We could also look at the noon. I don't think the noon would be a good one to do, but we could actually look at it, and you would have one that you could potentially do that is at 57.05. Now, the next thing I would want to look at, because this is on a 45-minute chart, is the 3-minute, because remember, the 3-minute corresponds to that. Would you really, really want to go short right now with the stochastics overextended? I wouldn't. And this is where you let this retracement over here occur, okay? And it is going to be very similar to this. The only difference is it's going to do it on the red side. Oop, I can't draw today. So here, we're going to flip the ATR, and we're probably going to get a congestion dot about right here. And we're going to have an ATR up here. And what's going to happen is it's going to come down here and then come back. And when it comes back, this would be my entry point. And it's going to form a reversal bar. Does everybody understand that? Now, the second portion of that is, okay, we're doing 57.05, okay? So the second portion of it is, where is the ATR? The ATR is at 56.92. The strike that we're trying to get is 57.05, which is right here. Okay, do you see how close this is to price versus the ATR? So I know once this occurs, I can pretty much go ahead and go in it over here. Now, that's going to sound confusing if you're new. But this is a repeatable pattern that we see, and it doesn't matter what market we're in, we can see this pattern and we can trade it. But we only do it from a higher time frame. Does everybody understand that? Now, actually, because this is a 12-minute, which I thought I was on a 45, do you see how that's a 12? Technically, you would want to go down to a 1 minute, which is going to be too quick for most of you. Let's see. And I don't like the 1 minute chart very much, which is why I usually don't trade it, but it's the market that's giving it to us, which is why it's called an example only. And, well, I can do this one. Okay. So do you see how it flipped the ATR, went back and tested the ATR? There was your entry point right there. Why did I know to go down to a 1 minute? Because that's the rules. Does everybody understand that? If you want to look for volume divergence and you understand it, there it is. Retrace back to the ATR, had volume divergence. This was just icing on the cake. Does everybody understand that? If you're brand new, it's probably confusing because it's the first time that you're being exposed to it, and it can get confusing. It takes studying this to actually get it, okay? It's not something that comes overnight. Any questions on that? Now, I want to show you when you don't take it, okay? All right. I'm sorry, I'm trying to work from all these screens. Erase that. All right. Let's say that you only wanted to risk $15 to $20. So you decided to do $56.97. Okay? Remember, $56.97. Okay? And this is what happens a lot of times. Do you see how this is at $56.92? $56.97 is probably here. See how far you are from price? No, because this is going to pull up and it's probably going to end up being right where your strike price is. You don't want to do that one. You don't want to do it. You're going to lose. Don't do it. This is where, and this is for demonstration purposes only, it is not giving out trading advice, okay? For example, I would still be doing the 57.05 because it's come back to that area, okay? And that would be my chosen one to do because that is much closer to price than this one all the way down here. Do y'all understand that? Now, do I like doing it from a 1 minute chart? No, I do not. I think the 1 minute is too noisy, but do you see how it's doing it on the 3 minute as well? It's same exact concept. Really no difference between the concepts. The only difference is on the 3 minute, I don't have the volume. Do y'all understand that? And the 3 minute would correlate. Let me move this one out of the way. Move this one out of the way. The 3 minute would correlate to a magenta peak over here on the 45 minute. Yeah, there's my NASDAQ. So the 3 minute, to get a setup on the 3 minute, I would need to see that magenta peak over here on the 45 minute. So do you see how you're getting the volume divergence over here? And it has not taken out this low. Price needs to come down to 5,700. If it comes down to 5,700, that's where you're going to get that magenta peak, and it's going to come back to around 56.81. That's knowing the indicators. You know, I've got a lot of videos online that show you this, the documentation. You know, it really does a good job of explaining the indicators. You know, each time you see a little pink dot on one of these bars, it's identifying that you have made a new high. Each time that you see at the bottom that there's a pink dot, you have made a new low. Okay? Each time there is a line that extends from it, you have an area that is providing either support or resistance. Now, why does that matter? Well, do you see how you have this line of red dots here? Do you see how this bar is really rejecting it? This is why you're getting that volume divergence. But you need this bar to complete to actually tell you, yes, indeed, this is volume divergence. And it also provides you with an excellent opportunity to read the stochastics. Notice that we have the blue dots and the red dots, okay? Connect the dots. Anybody ever played that game as a child? So from here to right here, currently, you're getting trend divergence, which means it's likely to go down. Now, what would you need to actually say, okay, this is not just potential, but it is definitive, okay? You need that reversal bar. And even if you do not know what reversal bars are, we anticipated that in the trend. So, and I don't have that on the bars, but in the trend, there is an option there that says plot reversal bar. If you check that, now you're going to get additional dots. This is a reversal bar. This is a reversal bar. This is the completion of a reversal bar. Completion of a reversal bar. Reversal bar. Now, I don't need that because I already know reversal bars. I know them like I know the back of my hand. I can identify them anytime, any place, anywhere. Can you? If you can't, then you put that on, and if it gives you another bright dot, then you know you have a reversal bar. Does everybody understand that? Any questions on that? This is where the magenta peak will probably come in on that 45-minute. The only reason the binary option is making money is because the magenta peak is coming in on the 45-minute. If it had just been the 12-minute, you probably wouldn't have made money on it. Does everybody understand that? Now, did you see how it flipped the ATR, went back and tested it? Again, we saw it on the 1-minute. We'll see it on the 3-minute. Now, the problem that is in the way is 56.97, okay? So if this gets to 56.97, I would be exiting, okay? Because the same pattern that you see down here is going to happen up here, and you only have 45 minutes left on your binary option. That means literally that this is going to come down. It's going to flip the ATR, and it's going to go back up, test the ATR before it comes down. This will take your money right there. You're going to give back all of your profits right here. You don't want to do that. Omar, yes, it is being recorded. And I'll post it later today. You know, so many times we're just focusing on, okay, what's moving, you know. But there is a reason to my madness, okay? You just have to learn the reasoning. And this is just like an overview of it. on the, and I mean, this is just really showing you, we knew from get-go that the NASDAQ was going to be the market to trade. Okay, this red line right here is the London low. Okay, this is the London high. Okay, and it's retraced back. It rejected it here and it rejected it here. Okay, now you will probably find, if we were looking at the other time frames, you will probably find that these are areas that had support or resistance from the congestion areas. Okay, you also see that it's hit it once, twice, 3 times. It's rejected that high 3 different times, and now it's coming down. Okay, do you see how you got that congestion dot right here? You're overextended. If we looked at volume, I guarantee you would have volume divergence on those 2 highs. Okay, these patterns repeat. It does not matter the market. They're going to repeat themselves. It's just the way it works. And what is going to happen now on the 12-minute, more than likely you're going to flip the ATR and then it's going to go back and retest it. And do you see how close this is to that ATR? This is where I'm watching. Okay, you had a risk of about 29.50. You've made 38. Okay, I'm probably going to exit this pretty soon if I see that that ATR is not going to be broken. And even if it is, I know from experience, boy, that sounded country. I know from experience that more than likely this is going to break the ATR and come back and then go down. It forms your zigzag pattern. And that means my job as a trader is to take profits. It's offering me profits. I'm going to take my profits. Does everybody understand that? Any questions? And a lot of times when you're in a trade like this, you're, oh, but I could make, yeah, you could. Yeah, and if you're trading the binary options, it's pretty easy. If you just click, it's going to come up with the right direction. So if I click here, it's automatically going to come up as a buy. And there's the price that is going to be. Now I can click that, or I can just come in and say, okay, when it reaches 20, which is about $10 away, then you can take me out. Okay. If I had the chart up, okay, this is the chart, and If you hold down the shift key and scroll on your mouse wheel, you can see, it expands, and you can see here is your working order is what it's called, and ours is set at 20, and right now the market's trading at 22. We just got filled. Boom, you're done. And I generally will set a profit target on everything I'm doing because I'll get distracted. I don't know how many of you know about the red bouncing ball, but it's like, ooh, ball. That's me. So I just go ahead and set a profit target. And generally, I set them at 15 on the short side, 85 on the long side. And to me, it's not that binary options offer you a ton of money on a contract, because they don't. What it does do is it allows you to limit your risk, increase your profit potential if you're using out of the money binaries, and then you just simply compound your contracts. In this case, we were risking about $30, basically made somewhere around $40. Well, if you were doing that with 2 contracts or 3 contracts or 4 contracts or 5 contracts, that's where you start making the money. But you have to have, the account size to do it. You're not going to do it with a $100 account, guys. If you're paying $30 and your account size is $100, that's 30% of your account. No, you don't do that. Any other questions, guys? And again, those 2 beautiful setups. All you had to do is know how to read the indicators to get them. And they're pretty specific, You just have to put in the time to study. That's all. Okay, if there's no other questions, I'm going to go ahead and end the webinar. Today is my mother's birthday, so I'm going to take her out. I hope everyone had a wonderful day. The Create Your Own package and the Silver package, which comes with all of the training that I offer online, is on special this week. I think it's like $500 off, but that special only runs, I think, for this week. All right, I will post this later today. Yeah, you can download those handouts, Omar. Well, thank you. She's 78 years old today. All right, everyone, have a wonderful week trading. I hope you enjoyed it, and I will post it and send out an email later today with the recording. In case you missed any of it, you can go back and review it. Okay?